Greetings, Growth learners. My name is Mr. Simbi, and welcome to today's accounting class. Thank you so much for joining me as we are preparing for the final paper, which is just around the corner. Remember, it is very important that you put in the hours, the time to prepare for the exam that is just upon us. So I'm going to continue with my paper 1 revision, and in today's class, I'm going to focus on the cash flow statement. So if you have problems with the cash flow statement, or if you know a friend that is struggling with the cash flow statement, I'll be able to assist you guys today. And I also look into financial indicators, calculation of certain financial indicators. I will also talk of some exam tips, how to study, how to prepare for the accounting exam, which is very, very important. Okay, so let's begin the cash flow statement. I will look at how to score more marks on a cash flow statement question, and I'll also show you how to do certain calculations. And one of the most important things that you have to know is the format. You have to know the format of a cash flow statement. That is your O, the I, and the F. The operating activities, your investing, as well as your financing activities. You must have knowledge of the notes to the cash flow statement. This is of great importance. Any note that has to be done to calculate certain figures which can be used in the cash flow statement, you have to know these notes. And then you also have to be able to differentiate between cash inflows and cash outflows. Very, very important. Something that is of great importance is you always need to read the instructions and the adjustments that the examiner gives you carefully so. So once an adjustment or an instruction comes, you have to understand these instructions. So I want to advise you and encourage you that during the 10 minutes of reading, you must read the question, understand the demands of the question, as well as the instructions which are given by the examiner. So we're going to now look at the format of the cash flow statement. Here is the format. So the first part, remember, we are talking about operating. So it is cash effects from operating. Then we come to the cash effects in investing. And then the last part is the cash effects on your financing activities. Then you have your net change in cash and cash equivalents, which is the last part of the cash flow statement. Now, very important that you understand your format, know your format. I always say, once you have practiced enough, the format now begins to reside in your fingertips. The moment you just put your pen down, you can see the format coming out much more easily. So it is of great importance that you know your format. Okay, so let's begin with activity 1. So as I'm doing my activity 1, I'm going to be talking also about the format. You know, whenever we have figures, it makes the format much easier to understand. Okay, so let us go. Activity 1, and activity 1 is extracted from the Free State Prelim for the year 2024. So this is an extract of the Free State Prelim for the year 2024. Let's see the information that is given. So the first part that we're going to focus on is note 3. So this is a fixed tangible asset note, and this is what we are required to do to calculate the amount of land and buildings that were purchased, the proceeds from fixed assets that were sold, as well as the calculation of the depreciation amount on vehicles. We understand that the third one is not going to be shown in the cash flow statement because it's depreciation. Okay, and then here is the additional information that we're given. Very important that you understand your additional information, because whatever you're given in the note needs the additional information for you to be able to calculate certain figures that may be missing. So read your additional information. And one thing, don't assume. Always read what is given, understand it, and then apply yourself. Are we good? All right, let's go now and see. So the first thing that we're going to do is to calculate the amount of land and buildings that were purchased. the amount of land and buildings that were purchased. That's what we're going to do now. And let's quickly go and do that. What information were we given? We were told extensions to land and buildings were made during the year. So there are some extensions that were done to the land and buildings during the year. Okay, and if we calculate that amount, where would we show it? We would show it on the investing activities, cash effects from investing activities. We understand that at the beginning of the year, our assets had a cost price of 1,820,000. That is the cost that we had at the beginning. And at the end, we have a cost of 2,049,700. So here are two amounts. At the beginning, it's 1,820,000. And at the end, it's 2,049,700. So you can see that your assets have increased. The cost has increased. That is because there has been an extension to the land and buildings. So what we want to see is those additions. How much were the extensions to the land and buildings? So what we're going to do, we're going to simply say it was 1,820,000 and then now it's 2,049,700. Because this is going to be a cash outflow, my answer has to be in brackets. So in order for me to do that, I'm going to calculate and say my 1,820,000. 1,820,000, which is what we had at the beginning, and then I'm going to say minus the 2,049,700. That is what we now have at the end. Let's see if we can have our calculator and see if that figure can come out. So it's my 1,820,000. Then I say minus the 2,049,700. And then it gives me a negative 229,700. So when I come here, I'm having a negative 229,700. Already you can see, once your amount is in brackets, we are talking about a cash outflow. Brackets, cash outflow. Are we good? Okay, so the first one was very much simple. We're simply looking at the additions, which is number one. And we know that once we have added new assets, it is a cash outflow, as we see here on the answer book. Can I go to the next one? Let's quickly do the next one. And the next one then says, calculate the proceeds from fixed assets sold. So we have fixed assets that we have sold. We want to see the proceeds. You have to understand that once we dispose an asset, we will receive some money. Okay, so we want to see the proceeds from the asset that was sold. Additional information. Equipment with a cost price, so they did not give us the cost price of this equipment. And it had accumulated depreciation of 66,650 on the last day, very key, on the last day of the financial year, was sold at carrying value on the same day, so that is on the last day. Okay, on the same day, new equipment with a value of 125,000 was purchased. Okay, so let's see. This is where we're going to record our information after we have calculated it. But for it to make sense, I'm going to try and see if I can open a quick equipment account. Is that okay? So we understand that my equipment account is an asset account. So on the debit side, it will increase, but on the credit side, it will decrease. Can I go? So I'll now say on my equipment, at the beginning, my equipment was 421,000. So that means here I'm going to have my balance brought down. That is 421,000. Are we still okay? And then I am told that I have added new equipment. On the same day, new equipment was purchased. So let's say it was purchased cash. So here I have my bank. That is the new equipment, and that is 125,000. So I'm coming here, new equipment, 125,000. Okay? And then at the end of the day, I know that I'm going to add all these figures. But I'm going to remain now with the balance. Here, I'm going to have my balance carried down, which must be my balance brought down here at the bottom, is this one, the 405, 500. So here at the bottom, I'm going to have my 405,500. That is the balance at the end. Remember, that's a balance BD here. That's a balance BD, which is CD here, which is 405, 500. Still okay. Now, we want to get this one. How much is that going to be? So to get that one, it's very simple. I'll just say my 421,000, which is what I have at the beginning, 421, 100. 421, 121, 100. Here it's 100 here. 421, 100. That is what I have at the beginning. And then I add my 125,000. So I come and add 125,000. And then I'll get 546, 100. So it becomes 546, 100. 546, 100. Here it's 546, 100. Then I subtract the 405, 500. Then I say minus 405, 500. And then I'll get 140,600. So here I'm going to get 140,600. Okay, and then that is going to be now my asset disposal. So this is the cost of the asset that we've sold. So now remember, here we want disposal at carrying value. What that means is give me the carrying value of the asset on the day that we disposed. What was its carrying value? And we know the formula for carrying value. It is cost minus accumulated depreciation is equal to carrying value. That is what they want. So I already have my cost, which is 140,600. That is my cost, remember. I calculated it over here. Minus accumulated depreciation. And we're told it is 66,650. 66,650. This is on the last day of the financial year. Okay? Therefore, it will now give me my answer here. Let's see, calculator. 140,600 minus 66,650. That is going to give me 73,950. So that is what I bring here now. 73,950. That becomes the final amount when I'm calculating the disposal at carrying value. The disposal at carrying value simply means give me the carrying value of the asset on the day of disposal. That's what it simply means. What was the carrying value on the day we disposed the asset? That is disposal at carrying value. Are we good? Okay. So remember, calculators needs to be close. And remember again, I keep repeating, do not borrow a calculator on the 13th saying I need to use it the following day. It never works. You need to have a calculator that you're using now, that you've been using, that you get used to, that you know where to find your figures and how to punch it. Okay? And remember, it is very important. Take a calculator that you're familiar with. I'll keep saying that one. Okay. Can I go on to the next part? Let's do so. Here's the next part. Calculate the depreciation on vehicles. Let's do that one then. Okay, let's see if we're given additional. There is my additional information. Okay, now, once we're calculating depreciation, I cannot forget to emphasize the calculation of depreciation on the sun. When you calculate depreciation, you remember the sun. The S stands for your sold. The O is your owed. And the N is your new. So you calculate for the three. The sold, owed, and the new. In this case, we do not have the sold. So we just have the owed together with the new. Can I start? Okay. So with the owed, it means I'm looking here at the beginning. The owed, that is my cost. How much is that? 1,686,000. Okay, that is the cost. But which method of depreciation are we using here? depreciation on vehicles is provided at 20% per annum on the diminishing balance method, not diminishing balance method. That means I'm going to need my carrying value. Do you know how to get a carrying value? Remember, we've just done it. Cost minus accumulated depreciation gives you carrying value. But in this case, I already have my carrying value. So I'm going to say my carrying value. So I'm calculating for the old. I'm going to say my carrying value, which is 918,500. I multiply that by the rate, which is 20%, and the old will be there for 12 months. The old will be there for 12 months because we did not sell it. So the old will be there for 12 months. That is 12 over 12. So I'm just going to say 918,500. I multiply that by 20%, and that will give me 183,700. So I'm going to get my 183,700. That becomes my depreciation. Are we still okay? That becomes my depreciation. So, and then I come to the new. Let's calculate the new. The new is 140,000. So I'm going to say 140,000 is the new. Okay, remember it's new, so it's not going to have accumulated depreciation. So we're just going to use the cost price when we calculate depreciation for it in the first year. In the first year, we're going to use the 140. Then we're going to say multiply that by a 20 over 100. And when did we get this new one? A new vehicle was bought on the 1st of June. And we know that our financial year is ending on the 29th of February. So we're going to count June. This is another very important aspect. This tip is of great importance. In the exam, don't count the months in your head, like June, July. No, don't do that. Use your fingers. Use your fingers that you have. So you're going to say June, July, August, September, October, November, December, January, and then February. That's going to give you how many months? That there is 9 over 12. That's 9 over 12. Let's punch that in together. Let's see how much you're going to get. So I'm going to say 140,000. Multiply by 20%. All right. So I'm just going to say divide by 12, and then I'm going to multiply by 9. That's going to give me 21,000. So I'm going to get 21,000 over here. So to get that one, that depreciation, remember, I'm now going to say my old 183.7, and then I'm going to add my 21,000. So the total therefore becomes plus 183.7, and then the total is then going to be 204,700. So this one, number 3, becomes my 204,700. Okay, that becomes the final amount. Okay, can I go on to the next aspect then? Are we still okay? Okay, let me see a thumbs up if we are good, so I can continue to the next aspect. Now, it's very important for you to note that your fixed tangible assets can be tested either in paper 1 or in paper 2, and or both. At times you can see it in paper 1, you can also see it in paper 2, depending on what aspect of it is being tested. So you need to prepare adequately. You cannot say, I'm going to wait and prepare for my paper 2. That's when I'm going to do my fixed tangible asset calculations. That cannot work. At the moment, you must be preparing, and you need to prepare adequately so, using the past exam papers. And you can always consult with your teacher so that you can get better direction. But fixed tangible assets need to be prepared for adequately so in both papers. So there are certain aspects that you don't need to forget, such as your 1 rand residual value. Whenever you see questions like that, you need to practice on such questions. How do I apply that principle? Are we together? Okay, can I go on to the next one? So in today's class, I think I also have another activity which will touch on that aspect of the 1 rand residual value. If you have a friend that is struggling in that area, come on, send them a WhatsApp message, tell them the class is on, and Mr. Simbi is going to explain that 1 rand residual value principle, so that come the day of the exam, you are flying high. Can I go to the next one? Let's go to the next one. Let's go to the next one. Okay, income tax paid. Okay, the financial indicators are going to come just after this. Here we're going to calculate the income tax paid. the amount invested during the year, the repayment of loan, as well as the net change in cash and cash equivalent. This is a favorite for most examiners because they know learners struggle with this one. So it's a favorite for most examiners. Okay, let's go then. Okay, so here is an extract from the statement of comprehensive income, and here's an extract from the statement of financial position, and here's additional information. Very key, very key. I think there was only this one bullet on the additional information, so don't worry, there's nothing that you are missing. Can I go now and begin to calculate the first amounts? Okay, cool. Let's do that. So the first thing that we're required to do was to calculate tax paid. Calculate income tax paid. Okay, so here is the information that we were given, extract from the statement of financial position. So what I then did here, I just opened a ledger account and I'm just going to calculate for my taxation paid. Are we together? So let's see if we are able to do that. Okay, so in this one here, the balance, you will find the opening balance, you're going to find it in 2023. All right, so in 2023, that's where you're going to find your opening balance. That is your balance BD, and the balance BD is on the credit side over there. Okay, so your income tax amount is 110,000. So I'm going to come here and then I'm going to say my balance brought down, that is 110,000. We're good. And then we are given the balance for 2024 now, and it is 125,000. So I'm going to bring it here and I'm going to say balance brought down 125,000. So remember, here I have my double lines here. Here I have my double lines. Okay, but if it's balance brought down there, that means here it's going to be balance carry down here. So here I'm going to get my balance carried down, which is also 125,000. 125,000. So in here, I'm just going to squeeze in my income tax. All right, I'm just going to squeeze in my income tax. All right, and here we're told income tax is 30%. This is 30% of the net profit. Income tax is 30% of the net profit. That means I'm now going to say 30. Okay, let me write it where you can see it properly when I punch the calculator. It is 30 over 100, 30% over 100. Multiply that by the 1,340,000, 1,340,000. Okay, let's see if we can get that one. So it is 1,340,000. Then I multiply that by 30%. That's going to give me 402,000. So I'll come here, my income tax is 402,000 over there. So my tax paid then, my tax paid therefore is going to be my 402. I'm adding everything that is on the credit side now. Adding everything that is on my credit side, which is going to be my 402. Okay, let me just do it afresh. I'm going to have my 110,000 plus my 402,000, and then I'm going to add lastly my 125,000. That would then give me 637,000. So I'll come here, that's give me 637,000. So that becomes my tax paid amount. That is the income tax that was paid. Okay, so there are several ways in which one could have done this. You could have done it in the note, or you could have done it in the sentence. Whichever way is easier for you, that is what you have to do in the day of the exam. And remember, this is a cash outflow when you show it on the face of the cash flow. So how do we indicate that the amount is an outflow? By putting it in brackets. So don't forget to put it in brackets. No bracket means no mark. So you must make sure you remember to put the brackets. Very, very important. The next one says, calculate the following amounts for the cash flow statement. You must answer, indicate the correct use of brackets. You remember what I just said? Okay, so in here, we are calculating the amount invested during the year. amount invested during the year, and you stand to win 2 marks in this question. Here is the information. Let's see. This is where we're going to answer this question. Investment, we're talking about the fixed deposit. This is our investment here. So our fixed deposit at the beginning, this is at the beginning, it was 1,450,000. And now at the end, it is 1,610,000. So you can see there's an increase in this case. There's an increase on the fixed deposit. That simply means we have made an investment. We've made an investment. So I will now say it was 1,450,000. This is what it was. But now it is 1,610,000. How much did we invest? So 1,450,000 minus 1,610,000. That means we have invested 160. You can see on my calculator, it's already in brackets. It's a negative amount. So I'm going to come here, then I'll say 160,000 in brackets. That's a cash outflow. That's a cash outflow. Can I go to number 3? Let's see what number 3 is saying. Here's number 3, repayment of loan. There is the information, and this is where we're going to show it. Already when I see repayment of loan, it means I'm going to have a cash outflow because it's a repayment, cash outflow already. So my loan initially was 2,450,000, but now it's 2,194,750. So I'll say what it is now by 2,194,750. Then I subtract what it was, which is 2,450,000. All right, and then I'll come here and the difference. So I'll say my 2,194,750. All right, then I'll subtract 2,194,750. Then I'll subtract my 2,450,000, and then that is going to give me 255,250. So I'll get 255,250. That becomes my cash outflow. That becomes my cash outflow. Okay. Others would use the other method that we've always been using, where we are looking at the change in working capital, whereby when we look at a loan, it is a liability. And when you are working on liabilities, you simply say current minus previous, and then you trust your calculator in that case. Okay, so you can do that, and then it will still give you the same figure, and it will tell you whether it's an inflow or an outflow. On the calculator, it already comes as a cash outflow. And then the next part, it says the net change in cash and cash equivalents. Let's see if we have, this is where we're going to answer it. As I said earlier on, this is the favorite for most examiners. It is a must that you must know how to complete the bottom part of a cash flow statement. Remember, you can complete it as a standalone aspect, or they can give you cash effects from your operating, your investing, and your financing, and then you complete this note. Or you can be given the extract from the statement of financial position, as we see here, and you can still complete this particular part of the cash flow statement. Okay, so let's begin with cash and cash equivalents at the beginning. Okay, so I'm going to call this cash and cash equivalents. This is at the beginning. Okay, and then here you're going to get cash and cash equivalents, and this will be at the end. We cool? All right, so let's start with the one at the beginning. Your cash and cash equivalents at the beginning, it's going to be your 2023 amount, which is going to be, because that is where we are starting from. So it's going to be your 2023 cash and cash equivalents at the beginning. So it's going to be your 2023 amount, where you have 25,000 here, and then you have a negative outflow of 124.5. Okay, that is a bank overdraft rather. Then you have a bank overdraft there of 124.5, which is a bank overdraft. So once you have a bank overdraft, you must always put it as a minus. Bank overdraft must always be a minus. Okay, so definitely going to get a negative there. So let's punch it in. So you get 25,000. That is in 2023. Then you say minus 124.5. And then you get 99.5. So you get 99,500. And then cash and cash equivalents now at the end, which is now your 427. And you can see there's no bank overdraft. So here's going to be 427,685. So we're going to do the bottom up approach. Start from the bottom, going up. And whenever we go up, we do opposite of the sign. So it means I'm going to come here and I'm going to say 427,000. It's going to be 427,685. 427,685. All right. Then I'm going to say opposite of that. So it's going to be a plus 99,500. And it's going to give me 527,185. 527,185. And you must be able to prove it going down as well. If you say that 527 minus the 99, it must give you a positive 427,685. So the idea is to do opposite of the sign. That is, on my 427, then I say opposite of the sign. As you see on my calculator, it is my 427,685. Then I added the 99.5 because I'm going up. And when I go down, I follow the sign. Hence, you end up with a 427,685. Are we good? Okay, I'm going to go on to the next aspect now. And the next aspect is going to be financial indicators. Now, it is very important, dear learners, that you know your financial indicators. In the exam paper, the formula sheet is also attached. So make sure you familiarize yourself with the formula sheet. Find ways of knowing which part of the formula sheet speaks to which financial indicator. So know your formula sheet so that you can be able to utilize it. But do not over-rely on the formula sheet. Know it, but you must still be able to calculate financial indicators even when the formula sheet is not there. So you do not need to over-rely on it. Do not over-depend on it. Let it just assist you. Very, very minimal. But the rest of your financial indicators must always stay up there. Okay. All right. So it is very important also, like here what I'm trying to show you, it is some names to the financial indicators. As you can see here, you have your profitability financial indicators, and here you have your solvency, and you have your acid test, and then you have your liquidity indicators there. Are we together? And it also shows in which paper these may be tested in. Okay, can I go on to the next one? Okay, I'm going to move on to the next one. And not to forget, here is your debt equity financial indicator. Okay, so the cash flow is paired with calculations for financial indicators in an exam. So you have to know your financial indicators. Financial indicators are allocated plus minus 12 marks. Okay, and here's the rest of the formula sheet where you have your ROTCE. I think it's mostly known for being the longest formula, and we're going to do it today in today's class as well. Okay, and then this is your break-even point formula that you need when you calculate the break-even point. Okay, so activity 2 now. Are we ready? Let's go. We are going to calculate the following financial indicators: the exit test, the debt equity, the percentage return on average shareholders' equity, as well as the net asset value per share. If you guys are ready, let's go. So the first one is the acid test ratio. The acid test ratio. Now, with the acid test ratio, let's see if we're given any information. This is the information that we're given. Okay, so with the acid test ratio, remember the formula is your current assets minus your stock, that is your inventory, adds to your current liabilities. Okay, so remember your current assets, it is note number 4 plus 5 plus 6 minus stock, which is 4 again, as to current liabilities, which we can talk about note 9 and other adjustments as well. Okay, let's move on. I think you can see here that we have information that we're given, and we are going to use this particular information. Dear learners, we're going to take a 2-minute break, and then we're going to continue. Let me see you in 2 minutes time. Welcome back, dear learners. Welcome back. And then we're going to now continue. Remember what we're doing. We're talking about the acid test ratio. And we had discovered that our current assets are made up of note number 4, 5, and 6. And when we do the acid test ratio, we come and we subtract note number 4 again. So it simply means I can just ignore this note number 4. And then I can just say it's note number 5 plus note number 6 as to my current liabilities. So if it's like that, then let's just do that. Instead of adding inventory and subtracting it again, just to add it in the first place. That's what we want to try and do now. Okay, so remember we're in 2024. We're not going to add inventory and subtract it. It is a waste of time. Just leave it out completely. So I'm going to start off with my note number 5. That is my trade and other receivables. So to get my trade and other receivables, I'm given an amount here, which is 534,330. So I'm going to come here and I'm going to say it's 534,330. But I'm also told that I have SARS income tax, which is not included in trade and other receivables. It must be in trade and other receivables because it is a debit balance. So I'm going to come and edit here, which is 125,000 over there. Then it has to be S2. Okay. Remember, I still have to add. Okay. Someone just reminded me. Mr. Simbi, you still have to add. Then I'm going to add what else? My cash and cash equivalents, which is 427,685. 427,685. Yes, which is this one there. And then it becomes S2, my current liabilities, that is trade and other payables. And how much is that? 324,000. Okay, and then once you do that, if you add all these amounts, you should get your total, which is 1,087,015, and 15, which is S2, 324,000. Okay, so remember with the ratios, your answer has to be S to 1. With your ratios, your answer has to be S to 1. That means I'm going to take this and I divide it by 324,000. Here I end up with 1. Okay, and then I do the same here again. I divide by 324,000. That's how I get my answer, which is 3.4. So the answer therefore becomes 3.4 to 1 on my acid test ratio. Are we good? Okay. Can I go on to the next one? Remember, in this class, we are not analyzing, we're just calculating. And then in the next one, we then analyze and we go deeper into the financial indicators. The next one, let's calculate the next one, which is number 2. Number 2 is the debt equity. The debt equity, the debt equity, the debt equity. When calculating the debt equity, remember the formula. It is your debt, which is your non-current liabilities, and then as to the shareholders' equity. So to begin with, we're going to take our non-current liabilities, which is my 2,194,750. 2,194,750 as to my shareholders' equity, which is given there. That is my 4,969,750. Then I divide everything by 4,969,750. Remember, to get 1. To get 1, then I say S2. So I come and I divide this one also by what? Same 4,969,750. And then my answer becomes 0.4 as to 1. That is my debt equity. 0.4 as to 1. Let's go on to the next one. And the next one is the percentage return on average shareholders' equity. The percentage return on average shareholders' equity. Okay, let's see. There is the information that I was given, and here is more information. So remember what we're talking about, the return. The return. Okay, this is the return to the shareholders' equity. Here we're talking of our net profit after tax. Okay, so I need to get my net profit after tax. And here I have net profit before tax, which is 1,340,000. So I am told income tax is 30% of the net profit. That means net profit after tax is 70% of the 1,340,000 because I want net profit after tax. So it's 70% of that. Let's see how much that is going to be. So I'm going to say 1,340,000. Then I get 70% of that. And that is going to give me 938,000. So I end up here with 938,000. So I now know that when I come here, I'm going to say it's going to be my net profit after tax, which is 938,000. And then I divide that now by my average shareholders' equity. By average shareholders' equity, that means I'm going to say multiply by half of the opening equity. Opening equity is my 3,661,750. 3,661,750. Then I add my closing equity, which is now in 2024, which is 4,969,750. Okay, and then I multiply all of this by 100/1. Okay, so once you punch that in your calculator, you should get an answer, which is 21.7%. Very important that you remember to multiply by half. Others will divide by 2. They just come here and divide by 2, whichever way you have to do. Remember, it is on average shareholders' equity. This is the instruction of the examiner in this case. Calculate the percentage return on the average shareholders' equity. Okay, can I move on to the next one? And then, which is the last one, and it is calculate the net asset value per share. Okay, so remember, formula is of great importance. And we are told additional information says 1.7 million shares were in issue. We have 1.7 million shares that were in issue. The formula for net asset value per share, it is my shareholders' equity, which is my 4,969,750, and I divide it by the number of shares that are in issue, which is my 1,700,000. And then I multiply that by 100 over 1. And then it will give you 292.3 cents. 292.3 cents. That becomes your net asset value per share. Okay, so we have now completed the first two activities, which were from the Free State Prelim. We are going to now go and begin activity 3. But before we do that, we're going to take a 5-minute break. We're going to take a 5-minute break, and then I'm going to continue with you after 5 minutes. See you guys in 5 minutes time. Welcome back, dear learners, from the ad break. And as we said before the ad break, we're going to look at the KZN prelim for the year 2024. And in this paper, there are some very interesting adjustments that we need to work on. So, if you're ready, let's begin. Okay, so remember we're focusing on the cash flow statement today, as well as the calculation of certain financial indicators. So, in this particular activity, we are given additional information which has to do with share capital, and then that has to do with dividends. But to take off with, the first requirement was for us to do the retained income note. That is note number 8. So let's do this together. Make sure you have a calculator close to you that we may be able to do this. Format is of great importance. You have to know your format. You have to know what comes after what. So in this case, we were given the answer book, as you can see, and the balance at the beginning was already put in for us. And what we were going to record now is the net profit. Remember, here you get your net profit, and it is after tax. So here we need the net profit after tax. Let's see what we were given. We were given net profit before tax, and then we're given income tax. That means I can just add these two amounts. Then I can subtract these two amounts. Then I get my net profit after tax. So I'm going to say, because this is net profit before tax. So I'm going to say 846,540. This is my net profit before tax. Then I'm going to subtract my income tax, which is 253,920. 253,920. I'm subtracting it to get net profit after tax. Okay, and then I'm going to end up now with 593,250. Let's just confirm that as we do it together. That is my 846,540 minus 253,920. 253,920, like that there. And then that's going to give us your 592,620. 592. So here it becomes 592,620. 592,620. 592,620 over there. 592,620. And then I'll come further down here now. And then after that, I'm going to get my repurchase of shares. And on the repurchase of shares, we are told that shares were repurchased on 1 December. An EFT payment of 22.4 were processed in favor of the relevant shareholders. Okay, so there are several ways in which one could have got the repurchase of shares here. Okay, so let's start with the first way. The first way was simply to say, if I am given my my number of shares at the end, I can get the number of shares at the beginning. So we want to get this number of shares there at the beginning. How do we get that? We can say your 416,700. We can say 416,700, which is at the end. And when we go up, we do the opposite. Remember that. So these are shares that we repurchased. So they are in bracket here. So we add them. Okay. So we're going to add them. So we're going to say plus 3.5. And then we subtract the 200,000 that was issued minus the 200,000. And that's going to give us 220,200. Okay. So here we know that at the beginning we're 220,200. Okay, that's of great importance. And then we come to the famous triangle. We know that the top part is the cash flow, and then here on my left hand side, which is your right hand side, that is my note 7, and this is the note 8, which is the retained income. So we are told here that the total payment was 22.4. That goes to the cash flow. That is 22.4. And that was a payment for 3,500 shares. Okay, so I can get the total in rands, but I can also get it per share. How do I do that? I'm now going to say my amount that was paid, which is 22.4, I divide that by the number of shares, which is my 3,500. Okay, and then I divide it by 3,500. That would then give me my amount, which is 6 rand 40. So I come here, then I get my 6 rand 40 here. So I'll say here it is 6 rand 40. Okay, so I have two aspects here. And then now I need to get the average price or the amount that was paid, which is above or more. I am told here that at the end there was 416,700 shares at the end. And when I come now to my ordinary share capital, which is my 2,354,355, if I can take that amount and divide it by the shares at the end, which is my 416,700, that should give me the average price per share at the end. So I won't need to do it from the top. I'm just going to do it now from the bottom using my 416,700. So I'm going to come here and then I'm going to now say my 2,354,355. I divide that by 416,700. And then I will now get my 5 rand 65. That becomes my average price now at the end. 5 rand 65. Okay. And then, so I am able now to do two things. The first way is to say, if we repurchased 3,500 shares and the average price was 5 rand 65, the average price was 5 rand 65. How much was the average amount in total? So I can now say my 5 rand 65, multiply that by 3,500. And that will give me 19,777. So I can come here and say that 19,770, let's check it again, 19,775 and 75. So I can come here and say, this is the first way in which one could have done it. We have paid in total 22.4, and the average price is 19,775. How much did we pay above? So I'm coming here now to say my 22.4 minus the 19,775. And that will give me 2,625. That is in brackets. 2,625 in brackets. This would have been the first method. The second method is to take the number of shares repurchased and then you multiply it by the amount above, that is my 6 rand 40, subtract 5 rand 65. So say my 6 rand 40 subtract the 5 rand 65, and that will give me 75 cents. So I'll take that 75 cents now, which is what we've paid above, and then I'll say here multiply by 75 cents. On my calculator, I'll now say 75 cents multiplied by 3.5, then that will give me 2625. So there were two ways in which one would have got the 2,625. I showed you first the rand way of saying the total that we paid minus the total for the average amount, the one that goes to note number 7. And then, or you can say the number of shares multiplied by the amount above the average price. That is what we've done here. And then the next one that I'm going to have now is going to be my ordinary share dividends. And the first one is going to be my interim. It's going to be easy now because I've already calculated my shares at the beginning. So my shares at the beginning were 220,200 and we issued 200,000 more. That means we had now 420,200. And then that was on the 1st of April. Dates are of great importance. And then after that, In September, then we issued an interim dividend. So I'll take my 220 plus the 200. That's going to give me 420,200. Then I multiply that by my 40 cents, which is my interim dividend per share. Let's see if we punch that in the calculator together, how much that is going to give us. That is my 420,200. And then I multiply that by my 40 cents. By my 40 cents. Okay. And then I multiply that by 40 cents. That's going to give me 168,080. So I come here, it's 168,080. Then I'm going to add these two amounts. Let's see if we can do that together. 168,080 plus the 133,344. Okay, I'm adding the 133, which is the final dividend. 133,344. And then the total gives me 301,424. So I'm coming here in bracket, which is my 301,424. And then we close everything, and then I will come now to the bottom. And at the end, we are now saying it is going to be, I'm going to start it from the top with that figure over there. Okay, so let's begin. We are now going to say on your calculator, it is your 386,040, and then we're going to add plus 592,620, 592,620, and then I'm going to subtract my 2,625, and then I subtract again my 301,424, and then in total it will give me my 674,611. Okay, 674,611. Okay, that becomes my retained income balance at the end. Let's quickly move on to the next one, as we are slightly behind time now. And then here we're going to calculate the dividends paid. We're going to calculate the dividends paid. Calculating the dividends paid. To calculate dividends paid, it's easy. It is much more easier and much more faster just to say last year's final plus this year's interim. So to get last year's final, that is last year's final, which is your 52,525. Last year's final. Then we add this year's interim. Remember, we already have this year's interim. We calculated it, and it was 168,080. So we add those two, and then remember, dividends paid, that's a cash outflow. So you're going to have your 220,605, and that is a cash outflow for dividends paid. I'm going to go to the next one. The next one is my taxation paid, and I have the same T account as I had earlier on, and you can see here the opening balance for 2023 is on the credit. So I'm going to come here and I'm going to say my balance brought down, that is on the credit side, that is 7,750. Okay, and then I'm going to have my income tax. I'm going to have my income tax, and my income tax is 253,290. 253,290. And I also have my balance at the end, which is my balance BD. So I'm going to come here and I have my balance BD on the debit side, 7,500. That means here it's going to be balance carry down, that is 7,500. Then I'm going to add everything up here. Let's see on our calculators how much that is going to give us. That is 7,750. Then I'm adding my 253,290. Okay, and then I'm going to add 7,500. And then the total becomes 268,540. So come here, that is 268,540. Okay, like that. So I'm going to come here, and it's going to be 268,540. Therefore, the bank amount becomes 268,540 over there. That becomes your cash outflow that you show on the cash flow statement. Remember, under your operating activities. Let's go to the next one. Cash flow from investing activities. And we're given information. There is more information. And we are going to use that one, and we are to show our information over there. We are told that fixed assets were sold for 1 million at carrying value. So already we are going to have proceeds from sale of fixed assets. Already we have that. Proceeds from sale of fixed assets. That is 100,000. All right. And then we are going to come and we're going to open a fixed asset account. And remember, it is at carrying value. So on the debit side, it will increase. So I'm going to start here with my balance brought down in 2023. That is 2,967,500. That is my balance brought down there. And then right at the end, I have another balance brought down here, which is 3,440,885. We stick together, which here becomes my balance carried down, which is 3,440,885. Okay, and then we are told fixed assets were sold. So that's the disposal. That means here I have my asset disposal. Okay, remember it's disposal at carrying value, which is 100,000. And then, not to forget, my depreciation over there. Then I'm going to come and record my depreciation. And my depreciation is 33,000. So what we are then going to get here is the bank. I'm going to close that one. Okay, I'm going to close this one. So we're going to look for the total this side. Have your calculator ready. So we're going to say now 100,000 plus 33,000 plus 3,440,885. And in total it gives you 4,473,885. 4,783,885, which is 4,783,885. Then I simply subtract my balance there. Then I simply subtract minus the 2,967,500. And then that will give me my bank amount. Let's do it again. Let's do it again. Let's do it again. I think I did not add an amount correctly here. Let's see it again. So we said it is my 100,000 plus. Okay, let's re-add this amount again. Let's re-add that amount again. We're gonna re-add this one again. Okay, someone is saying, Mr. Simbi, I think we punched the wrong figure there. Let's see it again. Okay, so on the calculator we say 100,000, which is the one at the beginning, plus 33,000, not 330, plus 33,000, like that, plus the balance at the end now, which is 3,440,885. Okay, and then it gives you 3,573,885. Correct amount now. Okay, so that's 3,573,885. 3,573,885. 3,573,885. And then we take that amount and then we say minus the 2,967,500. Then we subtract the balance at the beginning, the 2,967,500. And then we get 606,385. Okay, so I'm going to come here and then I'm going to get my amount at the end, which is 606,385, 606,385, which I therefore bring out here at the end, which becomes 603. Okay, here it is 8. 603,885 because of the 500. So that becomes now your fixed assets purchased. It becomes your fixed assets purchased. That becomes your fixed assets purchased here. That is your 603,885. That becomes the amount at the end. Okay, let's go on to the next one, which is your net change in cash equivalents. Remember, we had one similar to this one earlier on, and we just left with a few minutes, and then we're going to now say cash equivalents. So at the beginning of the year, cash equivalents at the beginning, we had 45,000. So I'm going to come here. It is 45,000, which is in 2023. But cash equivalents at the end now, which is in 2024, you will see here that I have 1,250. And I also have a bank overdraft, so it's going to be minus 47.5. Okay, so I'm going to come here and I'm going to now say 1,250. Then I say minus your 47.5. Subtract 47.5, and then it will give me a negative 46,250. So I'm going to come here. It's a negative 46,250, a negative one. So I'm going to do it going up now. So I'm going to say a negative 46,250 because I'm going up. I'm going to do opposite. So I'm going to say minus 45,000. And that's going to give me a negative 91,250. It's a negative 91,250 because I'm going up. Once I go up, I do the opposite of the second amount over there. Okay, that is the next one. Okay, I think we are done with this activity, and we're quickly going to rush to activity 4 now, which is the last activity for the day. In here, we're going to calculate these financial indicators. The first one is dividends per share, debt equity, and then your ROTE. Let's look at the first one, which is my dividends per share. Okay, so in this one, remember we had already opened note number 8 where we did the retained income. But if you come here, you will see that we're given the interim dividend of 40 cents. So for you to get your dividend per share, you would do it best by saying my interim dividend per share, which is 40 cents. Then you come and add your final dividend per share. That is what we don't know now, so that you end up with your DPS. Okay, so we already have the interim dividend per share. To get the final dividend per share, we now say my 133,344, which is the shareholders for dividends, the final dividend in 2024. I will take that one, 133,344. Then I divide by the number of shares at the end, which is 416,700. So I'll divide this by 416,700. Let's see how much we're going to get. So it's 133,344. Then I divide that by 416,700. And that is going to give me my 32 cents. So I'm going to get my final dividend. It is 32 cents. So I'm going to add now my 40 cents plus 32 cents. So 40 plus 32, that gives you 72 cents. That becomes my dividends per share. Once you're already given the interim dividend per share, you then just have to calculate the final dividend per share. I've seen some questions where they just want you to calculate the interim dividend per share or just the final dividend per share and not even to calculate the DPS, where you just calculate the final dividend per share or the interim dividend per share. So you must be able to do that one as well. Let's go on to the next one. And the next one is my debt equity. Debt equity. Remember, we already did this one earlier on. So that means I'm going to need my debt, which is my non-current liabilities, which is my 300,000 over there, as to my ordinary shareholders' equity, which is my 3,029,596. And to get the answer, remember, we divided by the 3,029,596 to get 1. And I divide this by the 3,029,596, and then it becomes 0.1 as to 1. That becomes the answer. And then lastly, we're going to do the return on total capital employed, return on average capital employed. So, very important that we get the formula right. And remember when I showed you the formula sheet, it was that longest one. All right. So it is your net profit before tax. So I'm going to have my net profit before tax here. And it's 846,540. And then remember, I'm going to come and add my interest on loan. That is plus 164,450. So I'm adding that. And then I'm going to divide all of this by my average capital employed. That means I'm going to say first, multiply by half. Let's start with the first one. That is my shareholders' equity. I'm going to take my shareholders' equity at the beginning, which is 1,443,000. Then I take my shareholders' equity at the end, which is 3,029,596. All right. Remember, I'm going to add this 2, multiply by half. Then I'm going to say plus. Again, I'm going to get another average again of my non-current liabilities. So I'm going to say my non-current liabilities at the beginning, 1,525,000, and then I'm going to add my non-current liabilities at the end, which is 300,000. And remember, it is average again. And then all of this multiply by 100 over 1. And then the final answer is going to be 32.1%. Is that what you get on your calculator? If that is the case, therefore, we are all on the same page. Very important that you're getting average of your shareholders' equity as well as the average of your non-current liabilities. There are different ways in which one could have done this. It will still be the same thing. Okay, we have come to the end of today's class, and thank you so much for joining me. I know that you guys are studying. Remember to practice for paper 2 as well. And remember to do your analysis and interpretation. Very important that you know how to analyze and interpret financial information. Prepare for corporate governance. It is very important that you know your audit reports, know your different types of committees. It is very important as you still have time. Do not wait and say, I'm going to study this just the day before the exam. It never works. You have to do it now when you still have time, so that when you get closer to the exam, it will just be a matter of you reminding yourself. Thank you so much for joining me in today's class, and I hope to see you again very soon. Goodbye.